We're jumping straight into Rocket Lab today. Everyone is watching the price action, but the real story is the transition from small-scale launches to massive defense infrastructure.
Exactly. You're tuned in to the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And if you're getting value from this, do us a favor, subscribe and hit that like button. It really helps us out.
It does. So let's talk about that price action, because you can't ignore it.
You really can't.
Yeah.
The chart has just gone vertical. So what's going on here? We have to address the elephant or maybe the starship in the room.
It's the SpaceX effect. You really can't analyze Rocket Lab in a vacuum without understanding the gravitational pull of SpaceX.
Okay.
We've seen Rocket Lab stocks surge, 10% recently? But if you zoom out, it's up something like 174% over the past year. That's massive momentum.
And a lot of that heat is coming from rumors about SpaceX,
Right.
the potential IPO in 2026.
That's the spark. The rumor mill is churning out this almost unbelievable number, a $1.5 trillion valuation.
Trillion with a T, it sounds fake. But the problem for most people is that SpaceX is private. You can't buy it.
Precisely.
Yeah.
And that creates this psychological pressure cooker in the market. It's a classic FOMO-driven rally, fear of missing out.
So investors see this dominant force, but they lock out.
Yeah. And capital behaves like water, right? It flows to the path of least resistance. Rocket Lab is basically catching all of that overflow because it's seen as the premier public alternative.
So to be clear, you're saying a lot of people are buying Rocket Lab just because they can't buy SpaceX. That sounds like a pretty dangerous reason to invest.
On the surface, yes, it's a sympathy play. But, and this is a really big, but Rocket Lab isn't just a meme stock riding someone else's coattails.
Yeah.
When you look at the one-year returns, they're closing in on almost 291%. That tells you something deeper is happening. The SpaceX envy might be the spark, but the fuel for this fire is a fundamental change in Rocket Lab's business.
All right, let's strip away the hype then. Because for years, Rocket Lab was just that company with the small black rocket, the Electron. Cool, but kind of a boutique service.
It's a completely different company today than it was even 2 years ago. We're not talking about launching university science experiments anymore. We are talking about heavy defense infrastructure.
And that shows up in the numbers.
It does. The metric that really matters here is revenue visibility. They have a contract backlog of over $1.3 billion.
$1.3 billion. Okay, that's not pocket change, but what's that money actually for?
A huge chunk of it comes from the SDA, the Space Development Agency.
Break that down for us. SDA sounds generic, but in D.C., that acronym carries a lot of weight right now.
It really does. The SDA is basically the Pentagon's arm for building a new, more resilient satellite architecture in space.
So moving away from a few giant, expensive satellites that are easy targets.
Exactly. They want hundreds of smaller, cheaper satellites working together in a mesh network. And Rocket Lab just secured a new $816 million contract with them. Wow.
And you stack that on top of an existing $515 million award.
Yeah.
You start to see the picture.
So the government is worried about adversaries shooting down satellites. So they're flooding the zone, and Rocket Lab is putting them up there.
Well, here's the twist. It's not just about putting them up there. That $1.3 billion backlog, it's not mostly for launches.
Oh, it's not.
No, it's for building the satellites themselves. Rocket Lab has become a prime contractor for space systems. They're manufacturing the spacecraft buses, the chassis, the power, the comms, the whole thing.
Wait, that feels like a massive pivot. I think most people still see them as a trucking company for space.
They were not just driving the truck anymore. They're building the shipment. And the financial implications of that are, well, they're profound.
How so?
The launch business is tough. Margins are tight. But in satellite manufacturing, their gross margins have expanded to 37%.
Hold on, 37% for hardware. That sounds almost suspiciously high. How are they managing that? It comes down to vertical integration, which we can get into, but it's also just operational efficiency at scale. Those SDA contracts alone could generate between $250 and $300 million in gross profit.
That's a huge injection of cash. It proves they can actually build complex hardware profitably.
Right. It validates the model.
Okay, so the government is paying them to build satellites. That's the safety net. But I know what people are really curious about, the big one, Neutron. Is this thing real?
It is very real, and it is the absolute game changer here. Because as good as the satellite business is, that 174% stock rise is all tied to the promise of Neutron.
Right, because Electron's small, it's a delivery van. You can't build a mega constellation with a delivery van.
You can't. Neutron is a freight train. It's a medium-lift vehicle. Payload capacity is 13,000 kilograms.
13,000. Electron is what, about 300 kilos?
Exactly. So that is a 43 times increase in capacity.
43 times. That's not an upgrade. That's a whole different species of rocket.
It is. It lets them launch huge batches of satellites at once, which is what the SDA and other constellation operators need. And the unit economics just completely change at that scale.
Okay, let's run the math on that, because big rockets usually mean big costs.
They do, but the payout is much higher. Each Neutron launch is priced at around $50 to $55 million, and the potential gross profit per launch is estimated at 18.5 to 20.4 million.
So what, a 40% margin on a launch?
Yeah.
That seems incredibly optimistic, especially since they haven't even flown it yet.
It is optimistic, but it's all based on the reusability of the first stage. If they can land that booster and fly it again, the math starts to work.
Yep.
And if they can manage just 6 launches a year, which is pretty conservative once they're running, that could support 111 to 122 million in gross profit.
Just from 6 flights.
Ah.
That shows you the leverage. But that brings me to this skepticism. Building a new rocket is, well, it's rocket science. It's famously hard.
It's the hardest thing in engineering.
We've seen other companies get stuck. So why should we believe Rocket Lab can pull off a 43x scale-up without, going bankrupt?
That is the right question, and the answer is their moat. It's their vertical integration.
We hear vertical integration all the time. But doesn't that also mean you have to spend way more money building everything yourself?
Initially, yes, it's very capital intensive, but in this industry, it means Rocket Lab isn't waiting on suppliers for critical parts like reaction wheels or star trackers. They just bought the companies that make those things.
So they literally rolled up their own supply chain.
They did. And you compare that to a rival like Firefly Aerospace, they're doing cool stuff, but they're less integrated. Rocket Lab's model lets them iterate so much faster.
So if you control the rocket, and you control the satellite, and you control the software, you can make it all work together perfectly.
It's kind of like the Apple model, right? They build the hardware, the software, the chip. It gives them a seamless product and a huge advantage.
That's a good analogy. And it makes them the only credible, publicly traded alternative to SpaceX for these kinds of missions.
It's a defensive wall around their business.
Okay, we've painted a pretty rosy picture here. Massive backlog, high margins, a new mega rocket. But I'm looking at the valuation, and I'm looking at the risks, and my stomach turns a little bit. We have to do the bear case.
Oh, absolutely. The risks are significant, and we have to be brutal about them. The biggest one, by far, is Neutron execution risk.
Designing on a computer is one thing. Actually lighting the candle is another.
And we've already seen setbacks. Timeline slips, testing anomalies. Those things have caused gap-down volatility in the stock. The market is watching this timeline like a hawk.
If an engine blows up on the test stand next month, the whole story changes.
The growth thesis just stalls. Every month of delay burns cash and pushes that revenue out further. And in spaceflight, delays are basically guaranteed.
Right. And when a stock is priced for perfection like this, any delay gets punished severely. Which brings us to the valuation.
Yeah, let's look at the price-to-sales ratio. It's roughly 89.
89 times sales. Let that sink in. A super hot software company might trade at 20 times sales. Rocket Lab is at 89. That feels like a bubble.
It is an astronomical premium. It means that massive future growth is already completely baked into the price. The price to book is around 35. These are not value stock numbers.
So if growth slows even a little bit, the stock could get crushed just on valuation compression. It could drop 50% and still be expensive.
Correct. And then, of course, there's the 800-pound gorilla.
The looming shadow of SpaceX.
Exactly. While Rocket Lab is the alternative, SpaceX is the market leader by a massive margin. And if Starship works perfectly and creates an abundance of cheap launch capacity.
That's the nightmare scenario, isn't it? If Starship can launch for pennies on the dollar, why would anyone pay $50 million for Neutron?
The counter-argument is that the government will never allow a monopoly. They need redundancy. They will pay a premium to keep a second player alive. But it's a huge risk.
Okay, so a nosebleed valuation, massive technical risk, and the toughest competitor in history. So why are analysts still putting such high price targets on this? I'm seeing consensus targets that suggest significant upside. Why?
The bull case is really driven by two things. upcoming catalysts, and scarcity.
Okay, let's start with catalysts.
We've got Q1 2026 earnings coming up in mid-May. The whole focus will be on backlog conversion. Are they turning that $1.3 billion into cash efficiently?
I show you the money phase.
Exactly. And then there are massive new contracts on the horizon. There's talk of potential lunar contract opportunities, a share of a roughly $4.6 billion NASA pool.
A lunar contract, like for the Artemis missions?
Yes. Taking payloads to the moon. If they snag a piece of that, it's another major validation stamp. It proves they're not just a low Earth orbit player.
And you mentioned scarcity value. What does that mean here?
This is a really important concept. Institutional interest is climbing. Big firms like Bailey Gifford are buying in. Why? Because if you're a big fund manager and you want exposure to the space economy, what can you actually buy?
You can't buy SpaceX, can't buy Blue Origin, they're all private.
Right. You can buy the legacy guys like Lockheed, but space is just a tiny slice of their business. If you want a pure play on space growth, Rocket Lab is one of the only games in town.
It's the only shirt in the store theory.
Basically, yeah. And that scarcity creates a premium. Investors almost have to own it if they want that exposure. It acts as a kind of floor for the stock.
So we have this tension, a stock that is undeniably expensive, trading on SpaceX sympathy. But it's also backed by real, massive defense contracts and a new rocket that could print money if it works.
That is the core conflict. It is a high-wire act. They are trying to go from a scrappy startup to a major industrial defense contractor, and the valuation is still treating them like a hyper-growth tech stock.
It feels like the next year is going to be make or break.
Absolutely. The next 12 to 18 months will define the next decade for this company. If Neutron flies, they cement their position. If it gets delayed by 2 years, that valuation has a long, long way to fall.
Definitely not for the faint of heart. But this brings up a bigger question about how the market even sees this company.
What do you mean by that?
Well, is Rocket Lab a manufacturing company or is it a technology platform? Because manufacturing companies, they get low multiples, tech platforms get high multiples.
And right now, the market is pricing them like a tech platform, like a software company. But at the end of the day, they need factories and launch pads and fuel.
But with the satellite services, the software that runs on them, maybe they are trying to become a platform.
That is the pivot they're attempting.
Right.
If they can prove their space systems business is recurring and high margin like software, then maybe the valuation is justified.
So the listener needs to ask themselves, is Rocket Lab the FedEx of space, just moving boxes? Or are they the Cisco of space, building the network infrastructure everyone else relies on?
That's the perfect analogy. And the success of Neutron is the first step in answering that question.
Man, this is fascinating stuff. All right, we're going to wrap it up there. We've covered the surge, the defense backbone, the Neutron gamble, and the valuation headache.
It's a complex story, for sure.
Absolutely. Thanks for tuning in. We'll be back with another breakdown soon.
See you next time.
And here's a final thought for you to chew on. As the space economy matures, consolidation is inevitable. Will Rocket Lab remain an independent giant? Or does its unique vertical integration make it the ultimate acquisition target for a legacy defense firm desperate to get a real foothold in space?
Now that's the scenario that keeps the short sellers awake at night.
Something to think about. Catch you later.